Okay, so I just wanted to welcome everybody to this joint webinar all about MFA and cyber insurance. So my name is Victoria and I'm the Director of Operations here at Cyphercor, and I'll be moderating this discussion between our three panelists today. So I figured I'd start off with some introductions. So Nick, why don't you kick things off for us? Introduce yourself. Feel free to talk about Measured as well.
Sure, thanks, Victoria. Hi, everyone. My name's Nick Little. I'm the head of insurance at Measured Insurance and Analytics. I've been in cyber insurance specifically, since about 2009. So way before this was even really a thing. And yeah, I Measured, we are an MGA backed by Lloyd's. You're focusing heavily on cyber insurance in the mid-market space. So yeah, welcome to everyone else who's on the call. And yeah, looking forward to the chat.
Awesome. Zach, you're our other panelist from Measured. Why don't you tell us a little bit about your role there?
Yeah, absolutely. I'm SVP of Underwriting, so I tackle a lot of the underwriting operations and strategy. I have an academic background in cybersecurity management and policy, but I've spent the entirety of my career in cyber insurance. So hopefully able to tackle some of these topics from both sides as well. So thanks for having us and welcome everyone.
For sure, yeah. All right, well, last but not least, Diego, you're here representing the MFA kind of side of this conversation. Why don't you introduce yourself and Cyphercor as well for a minute?
Thank you, Victoria, and thank you, Nick and Zach, for participating, and thank you everyone for coming today. I'm Diego Matute. I'm the CEO and founder of Cyphercor. We're a cybersecurity firm. We build seamless, user-friendly, secure, and well-supported multi-factor authentication solutions. So we've been in business for over 10 years. We have customers in over 60 countries. So there's been a lot of talk regarding cybersecurity insurance and multi-factor authentication. So I'm looking forward to a lively discussion.
For sure. All right, well, thank you so much. I'd kind of love to set the ground for our participants today a little bit. And I was wondering, Nick, maybe if you want to talk about kind of the state of the cyber insurance market right now, and perhaps a bit of a specific focus on this still relatively new requirement for multi-factor authentication.
Yeah, sure. Thanks, Victoria. I mean, we could probably spend an hour or two talking about the state of the cyber insurance market right now. But yeah, as a quick kind of like summing up, I'd say that the cyber market has had around a decade of extreme softening. And at one point in the last 10 years, there was around 200 different insurers who are actually offering cyber insurance. So that meant that there was a ton of capacity out there and a ton of competition. And that turns into a form of race to the bottom in terms of pricing, generally led by the first generation of insurtechs. I was one of them, so I'm comfortable saying that. And along with that pricing decrease, coverage became wider and wider as different insurers started to compete for business. So prior to ransomware really becoming a thing, ransomware was always included in cyber insurance policies. It was generally called extortion, but it was kind of more of a fluffy coverage. There wasn't really the severity of losses or the frequency around a decade ago. And prior to that, let's call them blue collar risks. So construction, wholesalers, all of those types were deemed very low hazard purely because they didn't aggregate any form of data. And now if we fast forward to 2020 and 2021, ransomware attacks increased by, there's different stats out there, but let's just say 100% year on year. And those ransomware attacks have been linked to a rise in remote work and employees who are generally working outside of their office networks. But also, I'd like to kind of mention as well that attacks have been incredibly easy to execute, and the payment method, which hackers are generally relying on, provides a mechanism of anonymity for the criminals, that being crypto. If we were talking, ACH transfers or cash or those types of things, it would be a lot harder for these people to get away with it. And prior to, I won't say the invention of cryptocurrency, but prior to that becoming mainstream and again, a payment vehicle for hackers to demand ransoms, hackers were generally relying upon insureds purchasing a ton of gift cards for them. So let's think, $1 million worth of, $1,000 Best Buy gift cards. It isn't really the most attractive thing for a hacker. And so, yeah, including like where we are today, businesses are just so much more reliant on technology than they had been in the past, and they're therefore willing to pay out. This is a difficult conversation to really have, but there's commentary around the market that the insurance industry has paying the ransom has only further validated the business model for the hackers. I think a lot of people would argue otherwise, but if the payment vehicle isn't there for the hackers, then there is no attraction. So the prominent ransomware groups in the last few years have typically been Revil, Evil Corp, DarkSide. They sound like something out of Austin Powers. But yeah, they're the prominent groups. And I think where we are today, I think the cyber insurance market is still predominantly unprofitable for insurers. And this has led to many people exiting the cyberspace entirely, losing their reinsurance, or generally having to take a different approach. So how has the market kind of approached this? Let's call it a correction. Prices have probably risen around 300% in the last 2 years, which is ironic because that's kind of where the pricing used to be before the soft market entered. And carriers are now scrutinizing risks far more thoroughly. Some carriers ask up to 80 questions on their application and RSA in an attempt to get comfortable with the cyber risk. Other carriers employ non-invasive penetration tests and active risk monitoring to try and prevent attacks by monitoring their insured's public infrastructure. And where we are right now is coverage is dwindling for clients. Many carriers are applying sublimits, there's co-insurance, and others are just trying to price themselves out of claims. So this has led to a dramatic increase in, I'm going to call it the active policies that are being remarketed. And what I mean by that is there's no such thing as a true renewal anymore. Renewal accounts are generally very sticky and they stay with one carrier. And you will generally see them stay with that carrier unless there was a problem. But all of those accounts are now actually being marketed, which has led to thousands of accounts being out there, for carriers to take a look at. So yeah, I'd probably sum that up with pretty much that's the perfect storm for a market correction. And I don't know, maybe economists will study this one day if they care enough about insurance. So yeah, that's kind of where we're at right now.
Sure, yeah. And obviously one of the things that some insurance companies have done in response to all this is, of course, introduce these new cybersecurity controls. And there's, a good many of them, whether it's endpoint protection, backups that are protected outside the main network. And obviously the one that we're talking about today is multi-factor authentication. And Diego, I was wondering if you could kind of talk, initially a little bit about MFA and specifically as it relates to insurance purposes. Really curious about, what should insurers be asking for and where should companies really be implementing MFA?
Yeah, that's a great question. Let's go back and sort of understand what multi-factor authentication is. So when I think about identity, you hear this, the idea of multi-factor authentication. So there's multiple factors. I like to think of them as identity dimensions. And so we know of three identity dimensions. So the first dimensions are things that we know. So those are your password, your mother's maiden name, the city you were born in. So those are things that are just in your brain, you know them. The second thing are physical things in your possession. So that can be your smartphone, maybe a physical hardware token, just physical atoms that you're in possession of. And then the third dimension are things that you are. So maybe an iris scan or something very unique about you biologically. And the reason why I like to call them dimensions is that they are completely orthogonal to each other. So if you have a system that implements multiple of these dimensions, then an attacker has distinct problems that they need to solve in order to compromise your account. So just because an attacker knows your password, it doesn't mean that they can be in possession of your smartphone as well. So even if an attacker has billions of passwords, doesn't mean they have access to billions of smartphones. So that's why multi-factor is so powerful in protecting identity, because you're just creating fundamentally different problems for attackers to solve. As a rule of thumb, if you're a business, and this is something that we've been saying for some time, and it's starting to be heard, you should think that everywhere there's a username and password should be protected with multi-factor. Passwords alone are not safe enough. So there are data banks of passwords with billions of passwords. Basically, every password humans have ever come up with are available and tied to user identities. So you can just assume that most passwords that have been used are just known. So using just that is not enough. So when you add an additional layer of security, you're actually like protecting the password from being compromised. Now that is obviously difficult to do. So if you were to prioritize, I would prioritize with these four items. So the first one would be remote access to your corporate's internal networks. So this means adding multi-factor to remotely accessible VPNs, firewalls, remote desktop. So for example, if your organization uses a VPN like Cisco ASA or a Fortinet or a SonicWall or Palo Alto, then those sessions, when they get created, MFA should be part of that session establishment process. It also applies for remotely accessible desktops. So if you're using a remote desktop gateway or a remote desktop web access portal, or remoting indirectly to a machine that's on premise or anywhere really, that needs to have multi-factor authentication. So many organizations manage IT in cloud or internally, also give remote access to their employees. Those remote connections need to be secured with MFA. But when thinking about that, asking whether an organization has remote employees is not the same as asking about remote access. Remote access is about what's accessible remotely, and not just from employees. It could be from suppliers, partners, outsource IT. Many organizations have third-party resources that access their network remotely to perform routine maintenance, audits, get information for reports. So it's important to note that it's about what is accessible remotely. The same goes for employees. A lot of time we see companies that have 100 employees and they say, well, only 5 are remote, so only they will need MFA. But when you dig deeper, you find that actually the remote access is accessible to all 100 employees. So although it's true that those 5 employees are going to be logging in remotely more frequently, the other 95 employees will be logging in on an ad hoc basis. But as long as it's there, the attack surface is there to bad actors 100% of the time. So it's important to think about it not in terms of whether it's remote employees or not. It's just what is accessible remotely in your internal network. Second, I would say remote access to what I like to call services or data. So this would be like if you can access your webmail from anywhere, like Outlook Web Access, or portals like web access managers, like say from Citrix or F5. These should be protected with multi-factor. Same for SaaS products that are being leveraged by an organization, like payment organizations, HR tools, customer relationship management services should all be locked down with multi-factor. So those first 2 examples of remote access to networks and remote access to services are dealing with remotely accessible endpoints. And the reason why that's important is because if it's remotely accessible to your employees, to your third party, then it's really remotely accessible to everyone in the world. So it's important to lock that down. Next, I would say privileged accounts in your organization. So privileged accounts, these are accounts in your network that are used to configure, operate, patch, deploy, and upgrade various IT systems. So they're also called administrator accounts or root accounts. So these accounts have full access to modify virtually any setting in an organization's IT infrastructure. So there's this idea that, well, if you're in your corporate network, you're safe, you don't need to use MFA. So a lot of times organizations will protect remote access to the corporate network, but not actually for privileged accounts. But it's not true. It doesn't give you enough protection. If a virus gets into the corporate network, the virus also will not have to deal with multi-factor, so it has more chances to spread. So it's a lot like having strong locks on the doors in your house, but your safe, which has your most precious thing, is just left wide open. You wouldn't do that. Fourth would be access to specific systems that have to do with backups or business continuity. So those should have MFA, because if anything goes wrong, then those are always accessible for business continuity. So that should also have MFA. So that's how I would prioritize it.
Zach and Nick, does that kind of line up with what you guys have seen as well? Or do you feel there's some kind of gap here that's existing?
I mean, at a high level, I think there's always a gap with cybersecurity. That's just kind of the nature of the industry, right? I mean, if we take the meaning of virus quite literally, and our security ecosystem is our immune system, we kind of require this constant battle and increase in capabilities of each side. So just from like a broad stroke level, of course, there's going to be gaps. There's SIM swapping, there's session hijacking, there's other types of attacks that can get around it. But I mean, what we've seen from a claims perspective is that MFA is by far and away one of the biggest deterrents of a successful ransomware attack. And, with the propagation of ransomware as a service, so this democratization of ransomware for much less experienced individuals to take advantage of, which on the dark web are referred to as script kiddies. It made ransomware much more accessible. And so since they don't have the technical know-how of, let's say the threat actors that are actually creating the ransomware, they're less likely to try to pivot and move around that and find other ways into a system. It really becomes a question of quantity and not quality of attacks. And so they're just casting out a wide net and seeing what they can catch. And typically it comes, I guess pun intended, through a phishing email. So there's other controls you should definitely look at, like a secure email gateway. But time and time again, throughout the claims process, we've seen MFA being a core piece of ensuring that a threat actor would not have made it into one of our insureds.
For sure, a lot of insurers are starting to ask for MFA. And Diego, another kind of question on that. I'm curious whether you could speak to, is MFA as easy to implement as some in the insurance industry kind of seem to indicate that it is? Because I think all of us here can probably speak to, sometimes prospective customers, policyholders push back a little bit on this. And I'm curious, is there a discrepancy there? Is it an education issue? If you could speak to that a little bit.
Yeah, I mean, it depends. I mean, implementing cybersecurity controls is there's a perception that it's very difficult because it's always a massive list of, you need to do these like a lot of different things, and it sounds like you're going for some sort of ISO compliance. So it could seem daunting. So it depends. It's not unusual that some companies would be pushing back, whereby insurance companies may think, oh well, that should be easy to do. And so I mean, it depends. I mean, if you are if you're using like software as a service like Office 365 or your Google Workforce, then adding MFA to insurance companies may seem like, well, all you need to do is turn on that feature in those cloud offerings, and that seems pretty straightforward. The problem with that approach is that, are you actually adding MFA where it's needed? So cloud offerings do have their own MFA features, but they're built for their own offerings, and they may not be protecting everything that's in play for that organization, like remote access, like remote services, like privileged accounts. So insurance underwriters should also not short circuit their requirements, as they do have that actuarial responsibility. So just because you have MFA in one place, it doesn't mean you're covered. Now, from a practical implementation standpoint, from the customers, what we've seen, there's been three big areas of concern when it comes to implementing MFA. So the first one is the cost of deployment. The second is what is the impact to end users? And then the third is what I like to call the operational effectiveness or the operational impact of that implementation. So cost of deployment. So IT costs are always scrutinized. So because IT in most businesses is considered a cost center rather than an enabler of business. If a plant manager needs $100,000 to repaint their warehouse, nobody's going to blink an eye. But when an IT department asks for $15K for new equipment, they're met with a lot of scrutiny. And cybersecurity is like the IT of IT. So because it's seen mostly as risk mitigation rather than a necessity to business. So there is always that initial concern of what's the cost, because there's going to have to be justification up the chain for that cost. So, and the second one is end user impact, and that's very important. So, there's the human element. So when an administrator is thinking about how to deploy this, they're first thinking about their own responsibilities, because that organization may have an IT department. The IT department may be between 1 and 3 people, and they do everything. They set up the computers, the printers. They are there when someone's not able to get in the door, or they're the help desk, the support. They do it all. So when they introduce something new, they want to understand that it's not going to impact their day-to-day, especially something that everybody in the organization is doing every single day, which is log into their various services. So it's a big concern how to get it rolled out and without having everyone calling that morning complaining that they can't log in. If a VIP or C-suite person can't access their slide deck for a conference presentation when they're on the road, they're going to be ringing the IT department no matter what time of day it is. So end user is a big concern, and it drives a lot of the initial conversations with organizations. And then finally, the operational effectiveness or operational impact is how is it going to impact that existing organization's IT investment and infrastructure. So administrators are users too, and they don't want to have to go and reconfigure everything or change something that was set up maybe years ago by someone that has maybe left the company, or it's working and we don't want to change it, or it's very challenging to get working. So there's a lot of concern that MFA is going to disturb all of that and introduce more burden, change status quo, and really perturb the day-to-day operational tasks of that IT team. Being a cybersecurity product, MFA can also come across as challenging and as an enterprise type implementation, which means hiring consultants, doing analysis, weeks of strategy, months of implementation and rollout. I mean, we've seen that. We've had clients that have spent months trying to roll out an MFA, and it wasn't successful, and it's quite a lot of headache when it takes that long. So when you look at it in terms of the size of the organization, big enterprises have concern because of scale, rollout, messaging, productivity impacts, accessibility, while the smaller SMBs, they have concerns because they're strapped by resources, IT resources, and budget. So to alleviate that, should be partnering with an MFA solution provider that walks the clients through the process, has optimized their product for leveraging existing IT infrastructure, and really just focusing on adding that additional layer of security without adding undue burden to end users or administrators. So an MFA solution that considers administrators as users too, and understand the IT lifecycle that SMBs face.
Zach and Nick, have you guys heard sort of similar things that Diego spoke to in terms of pushback from your clients?
Yeah, I think that's super interesting. I think us on the insurance side, always assumed, whether it's underwriter, broker, or whoever, that this is very much a kind of turn on configurable setting. And yeah, the amount of times we receive submissions that incept within days, and the client has promised to implement MFA within that time period, and I'm talking days. Yeah, it generally makes us feel pretty uneasy, especially having the relationship that we have with Cyphercor and kind of having the inside scoop on this type of thing. So yeah, it's a common thing to see clients who are in the process of implementing MFA, and it's then on the underwriter to decide whether that is something that they are willing to take on board and kind of run the risk of the implementation process from zero MFA or some of the MFAs to whatever is required. I do think it's interesting that I can't speak for the entire insurance industry, but the cyber insurance industry has particularly been reactive in terms of the controls which it requires. And I wouldn't say overly proactive. I remember when MFA first came out, it was just, please confirm MFA, and that was it. And there seemed to be much more to it. That then moved to privileged access, to email-based, to network access. We're now starting to see, most people are asking to the confirmation that MFA is required to access critical data, which is backed up. And I just kind of wonder where the MFA train will possibly end. Is it's MFA to do absolutely anything. I'm just curious, Diego, off the top of your head, outside of those four, are there any other kind of immediate system issues? I know you mentioned earlier, anytime which you're putting in a password, it should be MFA'd, if that's a term. But is there anything else that springs to mind that you would encourage your clients to focus on?
Yeah, I mean, really anywhere there is a password, you should really consider MFA. And so why is that? So why should passwords be considered as as weak? Well, so every year there's a breach report by Verizon. Every year it's the same statistic. 63% of breaches are due to weak passwords. Mm-hmm. And so why is that? Well, because there's databases with billions of passwords, because we've had tons of breaches in the last 10 years. So basically every password that's ever been used, except for, the select few that generate their passwords and have super long complex passwords, which are obviously, it's very good, but it's difficult for everybody to do that. The average internet user has probably 30 different accounts, but uses between maybe 2 or 3 passwords. And so what that means is that the password that a user is using for their bank account or for their corporate account is going to be similar to that one password that they signed up for a pets.com thing they needed to get for their cat. And then that database got breached in the months to follow. So by using just passwords, what an organization is doing is effectively outsourcing their IT to every other organization that accepts passwords. And so that's which is scary. That should be scary. You wouldn't sign up for something that didn't ask for anything, but eventually you're going to see that even just passwords will just not be enough. Now, it has to be done well, and this cyber IT industry, like the solution industry, is working on different ways to solve this problem. I mean, ideally, it would have a way that where you have maximum security and limited friction for end users, and we're not too far off from that with MFA today. You have push-based authentication MFA, which is a one-touch approved. That was actually pioneered by Cyphercor. We were the first ones to do a public demo of push-based authentication almost 10 years ago. But it's only going to get better, and I think that eventually we're going to see that everything that has a password is going to have some sort of form of MFA tied to it, and that password-only access will be a thing of the past.
Yeah, super interesting. I mean, even outside of insurance, just talking about technology, it feels like we're moving more to biometrics for accessing systems and those types of things, which is probably another topic which we could do one of these chats on, around the collection of biometric data. But yeah, that's super interesting. Thanks.
Yeah, I mean, there's a lot of talk too about moving towards passwordless in general, and implementing some form of MFA along with, it's called multi-factor authentication. I remember when it was 2-factor authentication, or I think maybe some people still call it 2-factor authentication. And so there is a world where, because hackers don't actually have to use your password, they actually don't have to find out what your password is. They can use password hashes and use that in order to be able to get into your account, and MFA would still be extremely helpful in that case. And Nick, kind of just to touch on a quick point in terms of like the problem in the insurance industry, a lot of the people that are filling out the applications, we're relying on the applications, right? But there are a lot of people filling out those applications that are not tech people, their CFOs, their CEOs, especially for smaller and mid-sized businesses. And what we've seen is, I mean, answers can fly all over the place. And, you know, I wouldn't be surprised if some people are filling out their cyber applications blindfolded or something. I don't know why they would be blindfolded, but, you know, so the accuracy in which we can rely on some of the information that we're receiving is also a big problem in the cyber insurance industry. And so having a verifiable way of ensuring that something is in place is hugely important. Whether it's, you know, getting a confirmation from a vendor. I mean, Nick, you've talked about in the past about screenshots of, you know, a little toggle being turned on that you have MFA turned on. I mean, some of it's quite comical, but I think there's some real validity in trying to get a concrete and get to the ground truth of whether or not an organization has certain controls in place. Just as an example, we had a client fill out an application asking what EDR they used, and the product they listed was for a completely different type of cybersecurity technology known as a SIM. And when they answered the question about SIM, they said that they didn't have it. So it's really clear that not a whole lot of people know how to fill out these applications. And, you know, some applications ask if it was filled out by an IT professional, which I think is helpful. You know, did the MSP do it on their behalf? And, you know, MSPs unfortunately aren't always the most secure either, not to knock MSPs or anything, but they're also a pretty huge threat vector in terms of the access. So Diego talked about third parties accessing, you know, remotely. You know, MSPs are one of the core types of organizations that access insurance remotely. And so there's definitely something to warrant, you know, looking at cyber insurance differently. And, you know, hopefully in working with Cyphercor, we can figure out what that best way forward is.
Yeah,
Definitely. I think the issue of kind of how do insurance companies validate, you know, what a company is putting on their application form is a huge question. And I think there was this case recently now with a major cyber insurer who's apparently suing one of their policyholders, and they've now alleged that the company, I guess, misrepresented its use of MFA in order to qualify for cyber coverage. I mean, is that something we're going to see more often now? Is this a weird one-off, or is this like a big kind of question that's being tossed around?
It's very interesting that now it's insurance companies that are taking up this helm of enforcing cyber controls. You know, we've been in this space for 10 years, and originally the companies that needed to, so I'm talking maybe like 20 years ago, the companies or organizations really that needed to have stronger authentication were part of society's critical infrastructure. So things like the energy sector, financial services, defense manufacturing, water systems, food supply, transportation. You know, where any reasonable person would think, yeah, obviously those sectors would have to have some sort of high level scrutiny of protection, not only physical, but cyber protection, is just too important for society for those to be compromised. And then, so after that, you saw different regulatory compliance come in. The first major ones were based on health. So in the United States, there was HIPAA, the Health Insurance Portability and Accountability Act, which was about patient health records. In Canada, there was a similar one, maybe like a year or two later, called the Personal Health Information Protection Act. So that was compliance that were geared towards protecting individuals' privacy when it comes to health matters. So again, that was of importance for, you know, at a national level. After that, you saw industry self-regulation start to happen. So the payment card industry compliance, so PCI compliance, they actually were a big push for adoption of MFA. Visa and MasterCard set out a set of rules that would force companies to implement increased security controls, because they realized that if people en masse had their credit card numbers stolen, faith in the credit card idea and industry would be shaken. So they had to take appropriate security measures. And then in the last decade and a half, we keep hearing about these colossal breaches, right? So you had Heartland Payment Systems, 134 million accounts. Court Ventures, which was a subsidiary of Experience, 200 million accounts. Home Depot, 56 million accounts. Ashley Madison, 32 million. Yahoo, 3 billion accounts compromised in 2017. So there was an increased scrutiny, but a lot of businesses still thought, well, this doesn't apply to me, I'm too small. But as time goes on, supply chains are interlinked. Large multinationals are effectively depending on smaller manufacturers and smaller businesses. There was more emphasis and importance of increased cyber security measures to protect all the businesses that had a digital footprint, which is basically all of them. And the cost of breaches wasn't just financial loss. There was reputation loss, time loss in recovery, trade secrets, your brand. So companies started to view cyber attacks as a threat to their core business operations rather than just risk of data theft. So then you started to see a new wave of companies requiring MFA. But now, so like real estate, accounting firms, law firms, so that was in the last, say, 7 years. And then enforcement was coming from new places, like large platforms like Walmart and Amazon. They also created, like PCI did back in the day, strict guidelines for external vendors, third-party sellers, manufacturers, collaborators to enforce a variety of cybersecurity controls, of which MFA is an important one. So, you have manufacturing firms, which are traditionally brick and mortar facilities, starting to turn, stricter cybersecurity practices like MFA. But now we're seeing an even bigger push because insurance companies and renewals are recommending MFA, which has further pushed cybersecurity controls to SMBs. So it's interesting to see that. I mean, in the last 2 years, the financial burden that insurance has withstood as a result of ransomware attacks is gigantic. In 2021, it was ransomware alone cost over $20 billion. And if you look at it from 2015, it was $375 million. So that's a 57x increase. So now insurance companies are saying, well, if we want to remain actuarially responsible, we now need to enforce increased cyber controls so that we can still give these policies out. So we're seeing now insurance companies kind of taking on that helm of enforcing those cybersecurity controls to make these organizations just insurable in the first place. So it's interesting to see how this is going to play out. It's likely that in the next, say, 5 to 10 years, we're going to see a wide democratization of cybersecurity, of which MFA will play a big role for businesses and individuals, and perhaps even see it at federal levels with legislation, just given how important the impact of poor cybersecurity measures can have on society as a whole.
Yeah, super interesting. And going back to the whole validation of controls area, it's challenging because each carrier, each insurance company rather has their own terminology which they use on their application form. If you compared 10 of them around the MFA questions, they would all be very different. And I think there's a combination of things where person completing the application form is like, technically, yes. And I've always been a huge advocate for removing yes/no questions because it just doesn't give enough information on the company. I think sometimes as well, you have people that just don't understand the question and sometimes they put no. Also been an advocate for, if you put no, explain why. I sometimes see a lot of IT people trying to be smart and be like, that's a stupid question. It's not important. No. And it's like, well, that's your entry into insurance. So there's that. But then, yeah, as Zach mentioned as well, I mean, having the correct person at the organization complete the application form. I had a submission yesterday, which was like, hey, we're just waiting on the CEO to complete the financial fraud questions on the application form. And I'm like, this is a $100 million sized company. Is the CEO the person who's transferring funds and knows the different protocols? Kind of made me feel a little bit nervous. But yeah, having those parts of the application form separated by duty seems to make sense. I wonder whether, kind of blue sky thinking, we'd move to a future where application forms are almost kind of like DocuSign verified by an MFA vendor or an EDR vendor and kind of stamped. for that type of thing, because yeah, the amount of claims the industry is dealing with, which when you start playing Monday morning quarterback and you go back through the file and you speak to the forensics team, it turns out what was declared on the application form is not accurate at all. And I'm not trying to allege that it was a pure misrepresentation or a lie. Sometimes it can just be extremely confusing. So yeah, the whole being reactive to a breach and doing active risk monitoring is one thing. I think, 3.0 of cyber insurance is those carriers who are able to partner with these vendors to actually get true validation that their clients have whatever is required by the insurance carrier implemented properly. It's constantly turned on. It's not just turned on and configured to get past the binding stage. And then 6 months later, I always state the example of the client who bought a 7-day trial of a secure email gateway just to pass the non-invasive penetration scan of the carrier. And, the next scan that came up a month later, it was turned off. I mean, it's pretty smart, but yeah, also seems like fraud to me. So yeah, the aforementioned carrier, which you mentioned, Victoria, which I don't think we're going to call out for legal reasons. That case, however, that turns out will be super interesting, and I wonder whether that will, show precedence in terms of misrepresentation or lying, if we want to go that far on application forms. But it's interesting that application forms is such an archaic form of completing an application for anything. So I'm definitely interested to see where the industry goes in the future in terms of getting information on clients' security posture.
Yeah,
Nick,
not to mention,
correct me if I'm wrong, but sort of in combination with an expansion in the kind of questions that insurance companies are asking clients, there's also been an expansion in coverage, right? Like these days, I'm curious if you could speak to kind of like what does a cyber coverage policy include, and why are companies looking for that more like comprehensive kind of service?
Yeah, totally. I'll let Zach talk to that because it's his turn.
Yeah, I mean, it's pretty interesting how the standalone cyber insurance policy came about, because typically there was an endorsement, also known as like an additional coverage grant onto other types of policies, maybe a general liability policy or a professional liability policy. And well, frankly, I think a lot of, as losses started to mount, a lot of organizations, insurance organizations realized it's like, okay, well, we want to get this off of our P&L for our line of business. Let's just start our own department. And not to knock the insurance industry, but a lot of the people that were put into these positions to start these new verticals of insurance for cyber, maybe not the most technical individuals. I think for a long time, the industry thought it's insurance. How much more different could this insurance be than the rest of insurance, since homeowners insurance in the time of Benjamin Franklin? Like really different actually is what everyone has found out. And just because of the technology component, is historical loss data, even that applicable? That question seems to be not so much. It's current state and future state or consistent monitoring. Anyways, I digress. So with these standalone policies during the soft market that Nick had referred to earlier, part of the soft market is premiums are really bottomed out and low, but then also there's like tons of new coverage, which really amounts to marketing efforts. It's like my policy is better than my competitor's policy because I have this one line item that gives you full coverage for, I don't know, public relations consulting in the event of a breach, right? So not that that's not important, but so a lot of clients actually now, and what we're seeing now is there's a scaling back. There's sublimits for what's called contingent business interruption, which is a coverage where an organization or an insured loses income or revenue because of the breach of a vendor of theirs. So it's not actually their systems getting breached, it's a vendor of theirs, typically a technology vendor, that ends up getting breached and causing a loss of income for an insured. So we're seeing a lot of scale backs in like the amount of coverage that's being granted. They're being a little bit more judicious with, you know, which of those coverages, but there are a lot of different coverages available. You just now need to have the controls in place to warrant you being able to have those coverages, which I'm a huge proponent for. In general, I think cyber insurance is a really good example of over-insuring for things that you don't need. And there's a lot of reasons for it. It could be brokers covering their E&O. Like the last thing that they want is to be sued because they didn't present an option that didn't have a quote option that didn't have full limits or as great a limits as what the client ended up buying. Client ends up getting breached and it ends up going way past that limit. But cyber insurance has been one size fits all for a long time. And Nick mentioned cyber insurance 3.0. What I imagine as 3.0 is very similar to car insurance. You have your car and you know maybe it's beat up and you don't necessarily want to insure the car, but you're really worried about what happens if you hit somebody and they get hurt, right? Or if you hit somebody and that person is not insured at all. So being able to specifically address where your needs are in an insurance policy is hugely important. And it's one thing that I think Measured does a really good job of is we can look at the threat vectors and exposures of an insured. And if they want, we can actually provide a custom tailored policy so that they're not overpaying for coverages that they don't need. So, you know, that's sort of my dream. And, you know, hopefully we can all get there one day. But yeah, there's lots of coverages available, but not all coverages are necessarily meant for all types of insurance. And, you know, looking forward to the industry starting to come along and understand that and be a little bit more nuanced in the way that you're creating your policy forms, your coverage, and how you extend your coverage to insureds.
Yeah, and just to add to that, I think that organizations shouldn't be purely insurance cyber requirement driven, you know, and there is going to be a realization that these cyber controls are not so difficult to implement as it may seem to be. They're not as enterprise as they kind of come off to be. You know, our claim is that we can get MFA up and running with any organization within an hour. And it's important to recognize that, because it really brings a level of cyber control that organizations are going to need. You know, in that case that where that organization is being sued by an insurance company, they were actually breached before. So they were allegedly it says in that court case, they were breached in 2020. They applied for cyber insurance earlier this year. They got breached again. And that's textbook cyber timelines, you know. So like in IBM's report where they claimed, you know, average breach cost $4.5 million each breach, that same report claimed that 30% of companies that are breached once are going to be breached again within 2 years. And the question is, why is that? Well, it's because the controls that are being put in place are not sufficient. And attackers know that. Attackers know that when an organization gets breached, it's a very difficult situation to be in. You have the entire ID department is on lockdown. They're trying to figure things out, but they're going to try to make shortcuts. They think that everything is okay. Okay, this is not going to happen again. And if they're not working with the right partners, either from a coverage perspective or from a technology perspective, those attackers are going to come again, because they know that if they've been breached once, very likely to be breached again. Same with a house being broken into. You know, a house that is broken into once is very likely to be attempted again, because they know that it was accessible in the past.
Yeah, that's super interesting, Diego. I mean, firstly, touching on the implementation of MFA, and that's exactly why we partnered with Cyphercor. So for those clients who are, you know, trying to seek insurance and they are kind of running out of time, you know, that is kind of where we shine in being able to get them the controls they need to put in place to bind coverage. yeah, exactly to your point as well. Yeah, nothing else.
Oh, that's great. So I'll just move quickly to the sort of question and answer section for our participants. There is a Q&A bar at the bottom. And we do have a question from the audience here. Is cyber insurance going to become mandatory for businesses? And we'll throw that one out there, whoever wants to take that.
Yeah, I think it's already becoming much more mandatory than it historically was, purely driven by contractual requirements. So if you are a company who wants to work with somebody else, then they are requiring you to have cyber insurance. I'm not a lawyer, but I see a lot of contracts, right? And I can tell the difference between, what do all these things say? And some of them go as far as saying, you need cyber insurance. Great. Okay. I'll buy an aggregate, liability limit and technically satisfy the contract. And some of them really, really drill down to, different coverage components, which, yeah, it's definitely become much more commonplace. And the days of a $250,000 requirement via contract are over. 5 million has always been a thing, and I think I've said this before. I know where 5 million came from, but it's like for a small company, you have to buy 5 million of coverage, and whilst that used to in cyber insurance cost $5,000, now you're looking at 50 to 100. So generally, when you're seeing the insurance price worth more than the value of the contract, these things start to not really make any sense. I can't talk to any incoming legislation or a regulation, whether that's domestically or elsewhere in the world. But yeah, I can only imagine different campaigns being put out there by different regulatory entities to encourage this, if not mandate it.
Yeah, I think that's definitely coming. It will come through industry self-regulation and then likely through law. So, in the past, cyber attacks were targeted to large organizations, but as we've discussed recently, you're seeing this wide democratization of ransomware as a service, and those attacks are indiscriminate to target, and they target not only large enterprises but small and medium businesses as well. So just to give an example, in May of last year, the Colonial Pipeline had their pipelines halted as a result of an attack. So there was demands of more than $4 million requested, and that was paid. And a month later, in June of 2021, the Biden administration sent a memo to corporate executives and business leaders entitled, "What we urge you to do against the threat of ransomware." And there they outlined top cybersecurity practices for businesses to implement to limit exposure. So these practices were well known to IT security teams, but the memo finally got the attention. And in the recommendation, there was a list of 5 best practices, and establishing multi-factor authentication was a key part of that. And so the goal of that was to protect society from being impacted and being crippled from these attacks. But what other segment can be significantly impacted? SMBs. In Canada and the US, SMBs make up 40 to 50% of the GDP of the countries, and they employ between 60 and 70% of the workforce. So if they are not protecting themselves against those attacks, again, you can have crippling impacts on society.
It almost in the United States, typically on a state-by-state basis, the limits that you're required to purchase for car insurance, but you are required to purchase car insurance. And that all came about because everyone sort of realized we're not really good at driving. I've lived in a lot of different places. The DC, Maryland, Virginia area typically has really bad drivers. But the same can be said for a lot of other places I've lived. So as a result of that, I'm sure insurance became part of that, just because of the financial losses that a lot of personal individuals were facing in these types of accidents and crashes. And I can say with confidence that we're a lot worse with technology than we are with driving, because we still don't even really know what a lot of this technology means. I mean, you look at what people share on social media. LinkedIn is being leveraged. It's still a social network, but LinkedIn, despite how professional it is being leveraged for a lot of types of social engineering. And everybody has a phone. So yeah, I could see a world where cyber insurance is required of a business. I'd be happy to talk about it more, but there's definitely a chance that could happen.
Sure. All right. Well, I am cognizant of people's time. So I think that just about wraps things up. I wanted to thank all of our panelists for their time this afternoon, and as well our participants who came out and listened. I hope it was enjoyable and educational. We do have a recording of this webinar, so we'll be sending that out to everybody afterwards if you wanted to roll any part of this back and watch it again. As well, I wanted to say, if you have any questions, maybe you think of it later, you didn't get a chance to ask it before, feel free to send us an email, marketing@cyphercor.com, and we can pass that question along to one of our panelists who might be able to answer it for you. But other than that, again, thank you so much, and I hope that everybody has a great afternoon.